Good afternoon. Welcome to a Monday episode of the Moving Markets Podcast. I'm Jeffrey Dunyan with Safe Option Strategies. Glad to have you here on a Monday afternoon. It is March the 11th, 2024. U.S. stock market has just barely closed at the time we're recording this, but it's not a lot to talk about in today's market movement. The bigger thing to talk about is what's going to happen tomorrow morning with the CPI report, Thursday morning with the PPI report, and what the likelihood is that things are going to change in a way that will make the Fed do anything different than the course they're on right now. So we're going to primarily discuss that. We'll talk a little bit about what happened in today's trading, but most of the focus for this podcast, this episode, is going to be on what's going to happen the rest of this week and how to be prepared for it, how to play for it. Make sure you take a minute to check us out on sostrades.com. We've got a phenomenal track record going to start this year. We're off to a roaring start. Don't forget we had over 100% return in our portfolio last year. And so far this year, with 2.5 months in, we're well over 30% and no sign of stopping. So take a minute to check us out at sostrades.com. Glad you're taking some time out of your day to tune in. Enjoy the rest of the podcast. All right, as you can see, the Dow Jones Industrial Average finished a little bit to the upside today, the S&P 500 a little tiny bit to the downside, and the NASDAQ a little farther to the downside today. All in all, a pretty flat, pretty blasé sort of day. Nothing real earth-shattering going on today to cause markets to move one direction or the other, and that's exactly what we saw. The NASDAQ was down a little bit more than the other index, than the S&P, primarily on the backs of NVIDIA selling off today, Meta selling off today, and AMD selling off today. Those three companies all had a pretty rough day, but I don't think it's anything to press any alarm buttons over. I don't think there's any reason to get panicky or feel like it's doom and gloom. Tomorrow morning, we get the CPI numbers out, and those CPI numbers and then on Thursday, the PPI numbers are going to be the biggest part of this week for absolute certain. If you take a look at the tomorrow, the CPI specifically, two things ought to jump out to you on the projections for the CPI. And that is that CPI month over month is expected to tick up just a little tiny bit. It's expected to stay flat year over year. And core CPI is expected to come down a little bit month over month and year over year. I'm going to make two predictions, and I don't very often predict these things. I try and just prepare for them and let them play out. But I'm going to make a prediction. Number one, I think this number is going to be pretty accurate. I think month over month, you're probably going to see that 0.3 jump up to 0.4 and be in line with the consensus estimate. I think year over year, you're also going to see a fraction of a percentage to the upside. I think this number is going to come in at 3.2 or 3.3, just enough to spook people and cause them to panic and see a market sell off based on the year over year numbers. Likewise, I don't think either of these numbers are going to be higher than the prior number, but I think they're both going to be in line, which means I believe this is going to be up 0.4, and I think this is going to be up 3.9, and not be a better number than what is expected, but actually a little bit worse number than expected, keeping it in line with no change from the month over month and the year over year core numbers. That's my personal prediction, and I think if those numbers do come in where I believe they're going to come in, you're going to see a pretty big sell-off tomorrow. You're going to see this market really take off to the downside. And I don't think that's necessarily a bad thing. I think a correction, we've had a couple of days in a row of the S&P selling off, but correcting down 10% to around 4,800 would honestly not be a bad thing at all. The Dow Jones Industrial Average is running really super, super flat right now. But in my opinion, it ought to come down and correct and maybe drop down to 3,700 or a little bit below. The NASDAQ, a little bit bigger sell-off in the NASDAQ the last couple of days, but still it has not dramatically changed the trend that it's on right now. I think the NASDAQ selling off about 10% and maybe coming down to 15,000 or below would be a good thing. The NASDAQ even correcting down to maybe 14,400. that's where I see the next really strong level of support if the NASDAQ starts to sell off, taking us back to where we were following the big November rally, but a little bit ahead of the December, January, and February edition of that rally. I think March, I think it would be a healthy thing for the market if March was an overall downward month. Give a lot of stocks a chance to reset some things that are overvalued. I think people are going to be looking for an opportunity to buy the dip. And I think some bad CPI and PPI numbers this week would actually be a good thing. Next week, the Fed is meeting again. And as of right now, there really is little to no expectation that the Fed is going to do a rate cut in March. The consensus is 97% believe that the current rate of 525 to 550 is going to remain the same. The picture starts to change a little bit, not a lot when we get into May, but changes a little bit more when we get into June. June is when the majority of people are starting to think that we're going to get a rate cut rather than have things stay the same. So we'll see what happens. That could all be flipped on its head dramatically if we get inflation rearing back up a little bit, and as a result of that, we get bad CPI and PPI numbers, or get the market selling off, is a better way to say that, as a result of the numbers ticking back up a little bit. So not a long podcast today. This is a pretty short one today. Tomorrow, there will be a lot more to talk about with what those actual CPI numbers come in at and what the market's reaction to them is. So we'll hope for some good numbers tomorrow, but my gut feel tells me that all those numbers are going to be a fraction higher. And it's only going to take a fraction higher to spook the markets, get people concerned about no rate cuts in the near future, and that'll be enough to really see this market tank. So I'm expecting a bearish market today. Tomorrow, I will be pleasantly surprised if we get something different. And like I said, we'll have a lot more to talk about when we get into tomorrow. Thanks, everybody. Have a great rest of your day. Bye-bye.